Hello, everybody. Welcome to Roller Coaster Day part, I don't know, up, down, mean reversion, craziness. But the question that everybody has today is, where is the support? Is the bull market over? Or are we just going to chop sideways? Well, I got some good news and I got some bad news. I got some key support levels and some key history that was made. And let's get into the story. I want to thank, well, some people love the volatility. In fact, if you can time the volatility well with perps, it's actually a dream come true, but it's also a very risky game to play. Anyway, hello everybody, and thank you to TND Tesla, K8, Sean Donnelly, and everybody else here from all over the world, and I am Colt and the whole gang. Thank you all for coming. Let's get into this story. And here I am in the top left corner, so you can see me. This story is called Key Support. And of course, shout out to everybody in Patreon and from Music Lover X21. Well, yeah, we did buy a lot of the dips, and we've been waiting for quite some time for that. In fact, I got into Nvidia for the first time since 2022. Again, it was so cheap. Anyway, Music Lover X21. Following James, I got some Nvidia yesterday, and my Patreon paid for the next 2 years. Talk about value for money. Woohoo! Well done for having the courage to jump in. Today, we're going to talk about a bit of Bitcoin news, some crazy things that are happening, how to avoid making an error with Bitcoin. We'll look at some Bitcoin miner valuations, some stunning data there, and a lot of on-chain and key levels of support. Let's get into the news first, to some fun things happening here. One, we talk, I'm talking a lot about payments, stable coins, etc., being an absolutely key part of all things crypto. But this news is very interesting. Mastercard is the second biggest credit card company in the world, and they just partnered with Kraken. And what's interesting about this, they partnered with Kraken across the UK and Europe to expand Bitcoin adoption. And they work with 150 million retailers. And the key thing about this, though, is kind of fascinating. It will enable retailers to receive Bitcoin as a payment and maybe stack Bitcoin at the same time. A lot of times for years, people always ask me, would you like to get paid rent in Bitcoin? The answer is, hell yeah, that'd be awesome. But now maybe retailers can be on the receiving end through Kraken, payments in Bitcoin instead of melting fiat. So that is huge news. And shout out to everybody in the UK and Europe. Good news for them. And this is also kind of interesting. And I am always torn and perplexed by this stuff. So in the US, there's a thing called the FOIA, Freedom of Information Act, and it allows you to petition the government to get access to secret records, apparently. Well, not necessarily top secret, but things that are kind of obfuscated by the government. And Meta Lawman, who is a crypto attorney, he believes that the US government knows the identity of Satoshi. And he wants to basically sue the government for information to release the actual name and identity of the Bitcoin creator, which has been a mystery since 2009. I personally would rather that it stays a mystery. It makes it much more exciting. I don't know why. And much respect to Meta Lawman, brilliant crypto attorney. But at the same time, let sleeping dogs lie. Let him be a mystery. Anyway, also the government doesn't know who he is, so it could all be for nothing. So that was kind of interesting too. And this one is kind of so funny. People make mistakes all the time with crypto. Remember, if you are playing with crypto and with wallets and with transfers, you are your own bank. There is no help desk. And this was kind of a fascinating story. A Bitcoin user mistakenly paid 3/4 of a Bitcoin in transaction fees due to, perhaps, we're not sure, a panic-induced replace by fee, which is called an RBF error. And the incident occurred 30 minutes after midnight yesterday. And the user then sent a second transaction attempt. So I'm not sure exactly what happened, but the initial transaction was 0.48 Bitcoin, about 40K, to a target address, and then a 0.2 Bitcoin, another $16,000, $17,000, $18,000 as a change error. And that's fees of totaling about 60K. Now, we're not sure exactly what happened, but maybe you can do a couple of things with your transaction. Shark Lover, good to see you, buddy. Thank you so much. You have manual settings in your wallet that can lead to costly mistakes, especially if you're uninformed. And maybe people got screwed up with their decimals. Maybe he meant 30.56 sats, but Butterfingers maybe wrote 305,692 sats. And this really underscores the importance of double checking, triple checking transactions. And always, it's real simple. Always test with a tiny amount first. Always. And be careful with your decimal points in life. Again, the transaction was worth less than the fees paid, which is kind of sad. So be careful out there with your wallets. Remember, you are your own bank. And let's get into the charts and let's talk about support and resistance levels and potential targets of where we could go. Criticalis in the Schweiz. Saluti. Bitcoin saw the largest long liquidation ever. We saw a dip down to 74K and then a very quick rebound. And that liquidated 7,500 in Bitcoin longs, which is, by my calculations at the time, approximately $600 million. That is crazy. Again, it was very volatile on April 6th. And then, what day is today? 10th, then volatility 7th, 8th, and then a huge rebound yesterday. And then a little dip again today. I mean, for the 100th time, be careful with leverage, okay? You will be hunted. You will be hunted. Now, the question is, to what level could you be hunted to? Let's look at a couple of key things. First of all, we did have the second largest candle ever. Some people call them mega candles. I call them omega candle. An omega candle typically is $10,000. This was a dream since 2017 to see a $10,000 candle. We technically got to the first one ever. If you measure from the bottom of the candle to the top, which includes the wick to the downside and to the upside, we had a 10,000 candle a few weeks ago. But the other thing that's fascinating to see here is the volume was huge. We thought everybody in Bitcoin was sleeping and there's no activity on chain, but boy, when it comes to extreme volatility, in comes the volume. High trading volume, huge price movements. Yesterday, we had 9K swing, indicating, again, the investors are there, but they're sitting on the sidelines. And the good thing about this, too, is this suggests a bullish sentiment in the market, particularly signaling the reversal or uptrend in Bitcoin after this typical, we're in the hyperbolic section of the bull run, the last 20%, where things get crazy, and we are seeing that craziness happen. And again, these candles are a positive indicator leading to increased volatility and trading opportunities and more attraction to Bitcoin too. So excellent news. By the way, I'm early today because I've got to record Cyber Bulls later. That will be published on this channel tomorrow for those people who are interested in AI and disruption and Tesla, which has also been extremely volatile. Anyway, that's the mega omega candle session. Now, another crazy news too, a realized cap is a cool factor basically that calculates exactly how much money basically is coming into the actual network. And if this is from the team at Glassnode, what they did was they anchored the bottom of the Bitcoin market in 2022, which was triggered by the collapse of FTX. And they quantified the magnitude of capital absorbed by Bitcoin and Ethereum since the cycle low. Okay, this is called the realized cap. And the realized cap basically added $468 billion. It went from 402 billion to 870 billion, you can see here on the chart, and that's up 117%, which is great. Now, when we compare that to Ethereum, the realized cap increased from 183 billion to 244 billion, only adding 61 billion, about 30%. So it's a lot less for Ethereum. And that also explains, follow the money. When you see capital flowing into an asset, price goes up. When you see less capital flowing into another asset, price does not go up as much. It's not hard. And the disparity in these capital inflows at least underscores why these assets have very diverging performance since 2023. Okay, small inflows, small results, big inflows, big results. And we'll see. There's other stuff going on with Bitcoin, which isn't that positive. We'll talk about in a minute, but yet these are some of the key levels. Now, speaking of key levels, short-term holder cost basis is a critical benchmark for assessing market momentum, especially during uptrends and downtrends. Right now, the short-term holder cost basis are at 93,000. That's the short-term holder realized price. That's what the average person that holds Bitcoin less than 155 days, the price they paid for Bitcoin. So the majority, everybody's pretty much underwater on Bitcoin right now until it gets back above 93K. Now, what some people do as well, they calculate the current short-term holder cost basis, 93K, with the upper and lower bounds established at 131K, which is one standard deviation, and 72K, which is minus one standard deviation. So the question is, why is this important? Well, typically, historically, we rarely dip down to minus one standard deviation. And at this level here, that would be $72,000. So if you're asking for the floor in this bull run, it's 72K. We got to 74,500. So we got within $2,500 of that yellow support level there. And the question is, where will we go top of the bull run? Well, typically, it's at least one standard deviation above, which means 131K, and that could be our bull run target. Who knows? This time could be different. This is based on history, but these are important levels to look at too. And of course, the middle of the road level is 93K. That's where we should gravitate towards sooner or later. And then if there's a bit of froth in the market, a lot of money flowing in, we could pop up to 130K, depending on what happens. But a key thing as well, that's also very important to look at, is what's happening with this next chart here. These are the Bitcoin technical pricing models. I did touch on the 365-day moving average yesterday, 76K, 75K, depending how you measure it. We bounced clean off that twice, which is important. And we've bounced 4 times off of that level in the past 3 years, which is important one to look at too. So if you want to lump sum DCA into Bitcoin and you still believe there is a Bitcoin bull market on, boy, you hit that 365-day moving average, forget it. That's a good place to buy. Zeno, thank you so much for coming. And then you see here the 200-day moving average is at 87K, which is a little bit different from the 93K here, which is short-term realized price. And then the 111-day moving average, this is called a pi cycle, is 93K, which coincidentally is exactly the short-term holder realized price. Again, mad confluence here, ladies and gentlemen. So watch these levels. Are we going to get above the 111-day? Yes, we will. Yes, we will. Just need to be patient and wait for the big money to come in. Now, other stuff that's important to look at is what's happening out there in the market. So we do have a lot of, the thing I care about here is just huge losses, record liquidations of longs, but we now see signs of seller exhaustion, which is very, very important to look at too, because the scale of recent losses are on the scale of the largest, if not the largest, capitulation events in the history of Bitcoin, everybody. Question is, how exhausted are the sellers? Well, this chart here, it tells you, this is the saturated losses. Basically, it tells you the seller exhaustion is nigh. The people that wanted to sell have sold. Their bags are gone, as I said many times before. If you look at the long-term holders and the short-term holders, the tourists that jump in and out, they don't really matter, but they're also, they've if they didn't sell at 74.5, they're not selling from here on in. They're going to hold and get back to their cost basis. But the long-term holders typically only sell approximately 40% of their bag, maybe a little bit more. But again, that's also done. We've covered that a few times this year so far. So seller exhaustion is there. The problem is we don't have the money coming in yet. There is some select stacking happening, but not the level we need to push the price up higher yet. And the problem is the money is on the sidelines because the T word, no, not that T word, the other T word, tariffs, have everybody sitting on the sidelines. But there's $7 trillion on the sidelines in the United States and money market accounts. When the rates come down, which they will come down, May, June, they're coming down. 65% chance there will be a rate cut, and probably 4 or 5 this year. Then people will discover, I'm not getting any return on my money, so I'm going to go risk on. And some of that will be deployed. And also the flight to safety around the world. These tariffs that are in place, by the way, are wreaking havoc. I saw a video out of mainland China yesterday. Factories are idled now. Orders have stopped. You think the US is in a bad way? China's way worse. I anticipate a capitulation over there. Xi may play hardball, but the will of the people, hopefully the dictator listens to the will of the people, will come back. Anyway, enough geopolitics for now. Let's talk about miners for a second. This is one of the key things. I've seen very, very bizarre stuff happening with the miners. And miners have gotten a lot more effective and efficient. I've seen that with all the data we look at. And the mining video is coming. It just takes a lot of hours to do. There is improved mining technology. That's why we hit 1 zettahash yesterday in hash rate. And profit margins are crazy. Miners have never been so profitable. Again, assuming Bitcoin's above 70K, they are making bank right now. And the market caps of these miners are in the toilet, considering how much money they make. We have some crazy stats here that, show you exactly what they are like. Like the NAV premium for Marathon is 4%. Okay, if you are investing $1 in Marathon, you're getting 96 cents in Bitcoin. And they have $2.5 billion in assets that you get pretty much for free. That is crazy. And their HODL bag keeps on growing. Some of the miners had to basically sell their bags. They weren't able to get into the treasury strategy. But as it shows, miners aren't able to pull off that treasury strategy because people are worried. And people are very concerned about will the miners ever recover? And this bull season is extremely difficult for miners. And I always warn people, never have more than 5% in miners. Never, ever. It's a cutthroat business. You speculate. You buy them in the bear, and then you ride them up, and then you take profit. But for those people who went all in on miners, they are hurting right now. So heart goes out to them. Listen to the rules. Allocations matter. They're absolutely key in investing. Probably the most important thing. And Bitcoin miners and the market performance so far, year on year, last 365 days, talking about 365 days, charts, lines, moving averages lately, miners are down 25%. Some are down a lot more than that. Some have done okay. And Bitcoin year on year is up 17%. So if we go back to April 2024, Bitcoin's only up 17%, which is not a lot. Not your typical bull run. The returns are definitely diminishing. Will we get one last gasp? I think so. I hope so. We'll see. Anyway, hang tough, everybody. And this is a cool chart from Econometrics of the actual results. Blue are the average of the miners, and Bitcoin is in orange. You can see Bitcoin was up as high as 50% over the last, 360 days or whatever. And then it has fallen back down again. All markets are nervous. Good to see you. But the miners, after about 6 months of the last year, up until between April and December or November, miners were up 94% on average. They'd all doubled, which was great. And then they got hit hard. So we did have that post-halving pump. Well, first post-halving dip, then the post-halving pump, and everything else. But the key message here I'm trying to get across is timing miners is critical. Absolutely critical, ladies and gentlemen. Now, another thing that's kind of weak, total weak sauce, is the ETFs. Nobody is touching these ETFs. Again, this is completely reflective of how all the money is on the sidelines. Nobody's going risk on until they get clarity as to what's happening with the T's that we covered already. And so far, since April, we had one positive day. The rest down 100 million, 300 million, 200 million a day. So nothing too drastic like we saw back in Feb or early March, but still, it's definitely not good out there. And final cool chart of the day is shout out to Oz Crypto. I thought this was very profound. This is going back to 2014. We've had 4 major scares out there. Okay. 4. Yeah. We had the deflation scare back in 2015, C19 in March 2020, and the Asia hit in 2024, and now we've got the tariff hit in 2025. Now, what do we see in common here? The overall trend is up. These are dips. Bull market is not over. We shall see where we go next. But odds are we mean revert to the upside and the trend is intact. So that is the story for today, ladies and gentlemen. I hope you enjoy the video. Don't forget to hit the like and subscribe if you enjoy this type of content. I'll be on tomorrow morning with Cyber Bulls, talking AI, robots, what's coming, what's off the checklist, what's on the checklist. It's going to be a good video, and that'll be out early morning tomorrow around 6 or 7 a.m. Thank you, Sean Donnelly. Thank you, TND Tesla. Thank you, K8, Chaotic Coder. Everybody, hang tough. We are not out of the woods. I forgot to even look at the Bitcoin price. Yeah, Bitcoin is actually, 79,200. It was at 83 a few hours ago. But it did fall as low as 77. So it remains volatile, but we just need to ride the storm out and then get to the other side. Thank you all for coming. Have a good night. Bye-bye.